Did you know that 25% of our lifetime we spend on enjoyment? And that covers our childhood plays, starts with that, then reduces during our working life, and increases again during retirement. That's why in this video, I'll show you how to retire comfortably in the Philippines with zero regrets. And most importantly, without burdening your children. We'll also look at how we can apply Bill Perkins' Die with Zero philosophy to truly enjoy and maximize that 25% of our lifetime. We do this by planning smart, so we can live fully and enjoy the life you work so hard for. We'll talk about investments that are applicable based on your age. We'll also cover some withdrawal strategies so you won't have to worry about running out of money, and how to protect yourself from unexpected shocks or emergencies during retirement. Because let's make one thing clear, retirement is your responsibility, not the government, not even your children. Yes, you give your kids a good life, support their education, maybe help them with a house down payment, but do not sacrifice your retirement entirely for them. Because the best gift you can give your children is not to become a financial burden in your old age. The reality now is that the world has changed. Life is more expensive. Your children will have their families, mortgages, and bills. If you depend on them for retirement, this can lead to stressful relationships, resentment, sometimes even family conflicts about money, and worse, generational poverty. So, what does comfortable retirement look like in the Philippines? For me, comfortable doesn't mean luxury, but having enough money to cover daily expenses without stress. Being able to pay for healthcare, medicines, and emergencies. Having some money for joy. You can travel, enjoy your hobbies, you can bond with your family. And most importantly, freedom. The freedom to live your life on your own terms, not begging or depending from someone else. For most Filipinos, that means building at least 10 to 15 million nest egg if you want a middle-class lifestyle. But the good news is, even if you don't reach that, a few million invested wisely can give you comfort and dignity. So, how do we build a nest egg for retirement? Well, if you're in your late 50s to 60s, you don't have much time to take risks. You need safe, predictable income. You can put your money in digital banks with guaranteed return. They pay 4 to 6% in interest on outstanding balance, and with digital banks, you can also withdraw your money anytime. It's very liquid. The other option is Pag-IBIG MP2. You can invest as low as 500 pesos, and on average, it pays 6 to 7% dividends yearly. Perfect for retirees who need steady growth. You can even ladder your savings by opening multiple MP2 accounts so that every year you have continuous cash flow. You can open an account, an MP2 account, say in 2025 this year, another account in 2026, and another account in 2027. By year 2030, account 1 matures and you can withdraw. Year 2031, you can withdraw the second account. Year 2032, you can withdraw the third account, and so on. You now have steady cash flow and your money is safely invested with very low risk. If you are in your 40s or early 50s, however, you still have 15 to 20 years before retirement. So you can mix safety with growth. Consider cooperative. These are tax-free in the Philippines and they often pay 8 to 10% annually. Choose CDA-registered co-ops in your area. For example, if you invest 10,000 pesos per month in a co-op at 8% for 8 years, that can grow to 3 million. The drawback of some co-ops is that they have share capital limits, so you can split your money between co-op and MP2, for example. Both are tax-free investment. You can also explore REITs or real estate investment trusts. These are like owning malls, offices, or hotels without buying physical property. They are riskier investments, but they pay dividends of 5 to 7% per year, and that's on top of appreciation growth. Now, if you are in your 30s, time is your best friend. You can afford to take calculated risk because your money has decades to grow. You can further diversify your portfolio, perhaps REITs or MP2 for dividend income, or even invest in a property for rental income that will also appreciate after decades. Another simple but more aggressive investment is UITFs or Unit Investment Trust Funds. They give you double-digit returns net of withholding taxes and fees. Go to your local bank like BPI, BDO, or East West Bank to open a UITF investment account. I made a separate video on how to invest in UITFs, so check it out in the channel. But if you invest 5,000 a month in UITFs, for example, at 10% for 30 years, you'll have around 10 million. These are different ways to earn the nest egg for retirement, and that's on top of SSS contribution. But the key here is to match your investments with your age and risk appetite. If you're older, look for safer investments, but if you're younger, you can afford to take more risks. Now, let's face a very real fear. What if you're blessed with a very long life, and what if you outlive your saving? This is a real retirement dilemma. On one side, if you save too little, you risk struggling in old age. You might borrow money, you depend on children, and you might be living with stress. On the other hand, if you save too much and never spend, you risk dying with millions left in the bank but no memories, no joy, no experiences, and full of regrets. So how do you balance? Number one, plan with realistic numbers. In the Philippines, a modest retirement may need 30 to 50,000 per month for food, bills, medicine, and some enjoyment. If you multiply that amount by 12, that's 360 to 600,000 per year. If you expect to live 20 more years, you'll need at least 7 to 12 million set aside and invested to earn interest. It entirely depends on your lifestyle. If you are spending 80,000 or 100,000 per month now, increase your budget and plan for 15 million nest egg or even more. Number two, don't forget medical insurance. Healthcare is one of the biggest threats to retirement savings. A single hospital bill can wipe out years of savings. In the Philippines, PhilHealth is basic. It's not enough. Consider HMO plans or senior healthcare packages. For example, a 50,000 yearly premium on insurance might feel expensive, but it can save you from 500,000 unexpected medical bill. Insurance is protection. It's not an expense. Number three, consider annuities. Ano ba ang annuity? An annuity is like a personal pension that you buy from an insurance company. You pay a lump sum, and in return, you receive guaranteed monthly income for life. This removes the fear of outliving your money, as you will keep receiving payments as long as you live. So how does that work? Say you invest 2 million into an annuity at retirement. You could receive 15 to 20,000 monthly for life. That depends on the terms of the annuity, of course. The downside of annuity is that you cannot take back the lump sum amount, that 2 million you have invested, if you die early. But the trade-off is that you have peace of mind. So medical insurance and annuities are your safety net. Insurance protects you from sudden big expenses from hospital bills, and annuities give you predictable income until your last breath. And these insurance and annuities can complement your investment like MP2, co-ops, UITFs, and even your SSS pension. Bill Perkins, in his book Die with Zero, says, the goal isn't to die rich. The goal is to die having lived richly. But why die with zero? Because we must accept that money is a tool. It's not a goal. Think about it. The purpose of money is not to hoard it until your last breath. It's there to sustain your life and create joy along the way. So here's how die with zero work. First, spend money in life stages. In your 30s or 40s, you spend money on adventure, travel, new experiences. You feed your curiosity. In your 50s to 60s, you spend money more on family bonding, bigger memory making. And in your 70s, you spend more money on comfort and care. But don't delay all spending until old age, because you might be too weak to enjoy your money. Secondly, when you retire, by the time you retire, use the 4 to 5% withdrawal rule. Principle is to withdraw only 4 to 5% of your nest egg yearly, and it should last you lifetime. Say you have 5 million invested, 5% is 240,000 per year. That's 20,000 available for you to spend per month. If you add SSS or pensions, you can live decently without draining too fast. And thirdly, think about the memory dividend. When we spend our money on experiences, the happiness multiplies every time you recall it. Think 100,000 spent on a Europe trip, for example, with your spouse. This can bring joy for decades. On the contrary, 100,000 left in the bank after you die brings zero joy. The key is Don't wait until your 70s to 80s to enjoy your money. The 4 to 5% withdrawal rule let you enjoy life while you're still energetic and healthy. Now, some of you might be wondering, why would I spend all my money before I die? Why die with zero? What about the children and the people you leave behind? Of course, we're Filipino and family is everything. But according to Bill Perkins' die with zero philosophy, leaving your money to people or to your children when you die is like giving your money away randomly. Think about it. Leaving inheritance to your children when they're already 60s is too late for it to have a real impact in their life. Instead, give them money when they need it the most to help them with the education, down payment for their house, perhaps a wedding gift so they can start a family, or why not spend it in experiences where you and your children or grandchildren can both enjoy and create memory. Do you agree? So here's your roadmap to retiring comfortably in the Philippines and dying with zero regrets. 1. Accept that retirement is your responsibility. 2. Define what comfortable retirement looks like for you. If you are spending 80,000 or 100,000. Number 3. Invest. You cannot save to retirement. If you're in your 30s or 40s, you can afford to invest in riskier investments as you have decades ahead to grow your money. If you are in your later years, late 50s or 60s, keep it safe with Pag-IBIG MP2 or low-risk investments like digital banks. Number 5, apply die with zero withdrawal strategies, 4 to 5% yearly. Spend by life stage. Withdraw sustainably, and invest in experiences. Number 6, make sure you have medical insurance to protect you from unexpected hospital costs and consider annuities to guarantee lifelong income. And lastly, support your kids when they need it the most, but never make them your retirement plan. Remember, the goal isn't to retire rich. It's to retire happy, to retire free, to die with zero regrets. If this video inspired you, hit like, share it with someone who needs it, and subscribe for more Filipino retirement and investing guides. Thank you.